Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
My pleasure. Good to be with you, Jim.
Josef, what's new at the Schachter Energy Report?
Well, I'm working on the April 23rd SER monthly, so that's the next big thing. And there's going to be two key sections in that. One about the stock market rebound because of the potential U.S. reopening plan that was announced this week, and then also Gilead's drug, which might help potential, or it seems to be helping COVID-19 people. But we still need the vaccine. Is still in the queue, so that's really something there. And then also, going over the OPEC cutback, the OPEC Plus cutback, and our concern that this is not sufficient, and I expect lower oil prices. I also think the general stock market got a good bounce from that mid-March low, kind of a 60% recovery, which normally you see in bear markets. And then once that's over and exhausts itself, and you can always tell lighter volume on that rally, which I think we're seeing. I think we're going to go see, more downside in the market and the test of the lows, and potentially some new lows. And with non-confirmations that kind of tell you you've got a double bottom. So I think that's likely over the month of May, April, May. So we're saying to people, hold your cash. We had a fabulous buying opportunity in mid-March, and we put 8 new recommendations out there to our subscribers. And I think we're going to see another great buying opportunity sometime of late April through late May. And the index, the TSX Energy Index, which is around 64, could be in the mid-30s. And the price of crude oil, we're rolling from the May contract, which is in the 18 range, to the June contract, which is in the 24-25 level. So I think the June contract could go down below 20, and that might be the low, and that would coincide with the stock market pullback of, the Dow's like 24,000. I think we go back down or slightly below the 18,000 we saw in mid-March. The other thing is so many people are asking us about what's going on in the general market on the energy side. The weekly EIA report, this week's OPEC monthly report, that we've created a new product that's complimentary and is free to people. They can just go to our website, and it's a thing called Eye on Energy, and it's a weekly piece that I put out on Wednesdays after the EIA report is out, and people can get an idea of the macro side of what's going on. And it's free. You just go sign up on the front page of our website. And then as you see that, you can decide if you're finding it of value that you might want to become a subscriber of our regular paid product. So we're quite busy here, and we're creating some new product at the request of clients. And this Eye on Energy is getting a very, very good response.
As world economies reopen, is the price of crude likely to go up?
Well, we need time, as you're seeing from the comments from different governors. Some of the ones in the West, Wyoming, North Dakota, South Dakota, will probably open up quicker. Florida announced today that they're going to allow the beaches to reopen with some restrictions. So the economy is going to start coming back in May. But we're going to see probably areas like the Northeast where you've got New York, New Jersey, and Pennsylvania, etc. Saying that they're going to work together to have a coordinated reopening. We're seeing the same thing on the West Coast for Washington, Oregon, and California. And now there's proposal, the ones around the Great Lakes may do the same thing. And if they have a coordination which says, okay, we're going to open up smaller stores, maybe smaller restaurants, with half the capacity they had before, maybe hairdressers, places to get your haircut for men, maybe, small stores, where they have, everybody wearing masks and they have allocations of people going in. I was yesterday heading to London Drugs to pick up some product, meds for ourselves, for the family, and they had lines waiting outside, and they had people inside with masks, and they're saying, okay, for every person who leaves, a new one can come in. They have lines, arrows for going in and out of different lanes, so it's quite something. That and people were falling into line and accepting it. So I think we're all going to learn to move in a different format going forward. We're going to all be wearing masks for a while. But until they find a vaccine, this remdesivir, which they're talking about today from Gilead, is great for helping people who are sick, but it's not a vaccine. And so the key thing is we need the vaccine before we go out in public, especially if you're high risk and older, without a mask. So that could be a year. This Gilead drug is showing promise for helping people who are ill in hospitals. And we need that to happen, of course, but more importantly, we need the vaccine, and that usually between the trials and finally getting approval by the FDA could take a year, and we still don't have any official names and companies that are saying we've got it, and now it's just proving it to the FDA and getting approval to take it out. So until we get a vaccine, I think we're not going to really see a strong economy. And so the price of crude oil may come back from, let's say, we're at 18 today on the May contract, the spot contract, but I think we'll see, demand pick up in Q3, and then Q4 when we had 100 million barrels a day demand in the Q4 of last year, we may only be 90 or 95, but right now, given the U.S. fall off and the rest of the, Europe's, mitigation and closure, we're probably sitting with about 70 or 75 million of daily demand. And, if you go back to the beginning of Q1 of this year, capacity was 100 million. So the 9 million barrel a day cut by OPEC, and the maybe 6 to 8 million decline in Canada and the States from companies shutting in production, over the next few months, that's not going to be enough to balance supply. So we've got a glut probably through the end of Q2. Q3, maybe things get closer to break even. And then Q4 is if the OPEC countries abide by their agreed number, I think it's 5.7 million, then and only then could we see inventories decline and prices recover into the $50 to $60 per barrel for WTI, which would be needed for the industry to be sustaining on a funds flow basis.
What do you see ahead for natural gas once things get back to so-called normal?
Well, natural gas is holding in very well. I think today AECO is $1.87, which is a very good price. So that's why you're seeing natural gas stocks outperforming the oily names, even though today the oily names are bouncing because the federal government announced two things today. One was I think it was $1.7 billion for the $1.7 billion for to clean up the orphan wells in Western Canada, in BC, Alberta, and Saskatchewan. But there's talk that they're going to have some kind of backstop loan provisions, which they haven't gone through into the details, or I haven't seen them yet, to help companies get through this tough time. So once we get the more details on that, and if they are ones that can really help the companies and they can get access to them, if the ability for these companies to survive through the next few months, when prices are still low, that would be very helpful. But I think the natural gas stocks, are going to do much better because the commodity price is very good, and with the amount of drilling slowing down, we're not going to see the inventory build over the coming months. So we could be sitting with decent prices in the summertime when normally they go low because there's too much capacity in terms of the industry versus the amount of transportation. And then the more important thing is when we head into winter of 2020, 2021, we could be seeing much better prices simply because of the fact that the industry has just stopped drilling and depletion kicks in, 30-40%, and all of a sudden we're sitting with a shortage of gas, and that would be very positive for both the Canadian and the U.S. industry. So our favorite commodities right now are natural gas first, condensate second, light oil third, and heavy oil, which is WCS, of course. That's the one that's having a bounce today because of the announcements from the government. But the key thing is the price of WCS is still below what the company's operating costs are, so it's going to be a tough one for the heavy oil, oil sands, and thermal oil players until we get back into the $40, $50 U.S. for WTI. And then when you take the conversion of the currency, that would cover operating costs, royalties, transportation, and provide a profit to the producer.
We'll have more with Josef Schachter right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Josef Schachter. Josef, are current low crude oil prices predicting recession?
Well, I think we're with the unemployment numbers we're seeing on both sides of the border. 20 million people in the States, is a shocking number with the number of people claiming unemployment benefits. In Canada, we're probably pushing 1.5 million to 2 million now. So we are in recession. The U.S., they're talking for the year might be, 6 to 8% decline. But in the second quarter, I think some of the major investment houses are using numbers of minus 24 to minus 35% decline in second quarter GDP. So the V recovery that the president wants means Q3's got to start, having a big rebound. But I think given the staging that's going to happen to bring the states back, given the announcements that we've seen in the last few days, I think we're looking at more of a U period, and the U bottom portion will be Q2, April, May, June, and then part of Q3, and it's only in Q4 that you see the upside of the U, and that's when we start getting the recovery in the economy, positive growth in Q4, and then a very decent recovery Q1, Q2 of 2021. And in terms of world energy demand, the 100 million that we were using, let's say in the beginning, January, February, before the virus hit, we may not get back to that level for a year or two, simply because I don't think airline traffic is going to pick up that much. We may do more driving, so gasoline demand may come back, but I think the cruise ship business, the airline business, is going to be hurt somewhat, and people are going to be staying more at home. Because they'll still be wearing masks, and the issue of schools, when do they open, and all that stuff, I think is going to all have an impact on the travel industry. So I think that it's going to take a year or two before we get to the full economic recovery and demand at 100 million barrels. The point to make, though, is with the shutting in of capacity by OPEC, and also the involuntary shutting in of capacity in North America because the economics aren't there, we're going to see probably production come down 10 to 15 million barrels by the end of the year by the two of those. And if demand has gone from 100 million in January of this year to, let's say, 90 million in December, if we've cut back to 85 million of capacity, that's when you'll see inventories come down. And that's the bullish thesis for a recovery in prices into the $50, $60 U.S. And when you convert that to Canadian dollars, that makes the industry healthier. So the market's jumping today and bouncing because of the two federal announcements, but I think we're going to see a pullback sometime over the next month or two, test the lows, both for oil prices and the oil index, the S&P TSX Energy Index, and that'll be the next great buying opportunity. And that's what we're putting together in our report for our clients and subscribers, and we'll be keeping them updated of when we see the signal to take advantage of the bargain prices that are out there right now. But they will be better bargains even in the next month or so.
Is there any good news for Albertans regarding oil and gas?
Well, the announcement of the government today of the cleaning up of the orphan wells, that's going to probably create a few thousand jobs in the service sector, and it'll clean up an environmental problem that's been out there for a long time, and that I think is a positive. There's also a government announcement today about methane emissions and creating jobs there. So on the environmental side, I think the government has made some very good moves that will be positive in terms of the industry and some jobs for the service sector. But until oil prices rebound and the industry can start drilling new wells, and drilling rigs are active, not the service rigs, we're talking about the drilling rigs, that needs much higher prices. Companies in Q1 were active because they, normally companies will drill so they get their production up, and then Q2 is breakup so that there's no real drilling going on. Q3 is going to be horrible because the industry is hurt by low cash flow if they have cash flow after servicing their debt. So it'll be a very quiet one. We just got today the rotary rig count for Baker Hughes, and the numbers were horrible. For the U.S., the rigs count was 529 rigs, down from 1,012 last year, so down 48%, and it was down 73 on the week. In Canada, we were 66 a year ago at this time. We're 30 now, down 5 on the week, so that's down 55%. So we're looking at a minuscule activity now, simply because of the fact that the companies do not have much in terms of cash flow when they're all taking their volumes are coming down. They've had to lay off staff. You've seen announcements of companies that were paying dividends cutting those dividends, and there were, I think, 3 announcements this week on that. And then we're looking at companies saying, because of these tough times, we're having directors' salaries come down, or payments going to directors going down, and the senior executives and the employees at many energy companies are taking pay cuts. So it's a tough time for the industry, and until we see a vaccine that gets everybody out fully, to the day-to-day life we had, in January, February, before the virus really exploded on us. It's going to be a tough time out there for the industry, even though by the fourth quarter we'll see a little bit of daylight. But, a full recovery is going to take somewhat longer than that.
We'll have more with Josef Schachter right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Josef, what could the OPEC Plus deal mean for the crude oil market?
Well, the OPEC deal, there's 2 issues to it. Number one, do they abide by it? And, historically they haven't. Iraq has cheated, Nigeria's cheated, and Russia's saying that they're going to cut back by 2 or 2.5 million barrels. They've never really done that in their past when they've agreed to it. Part of the issue is the number they've agreed to doesn't include their condensate numbers, so they've been exempt from that, and in the prior numbers they had to include it. So the decline isn't as because I think they do 700,000 barrels a day of condensate. So if the number they had at when they started was, let's say, 10.5, and now they don't include the condensate, the cut they're taking, you add back the condensate, it's not as severe a cut as they said it would be. So the issue to is helpful, and the cuts are helpful. But again, for the next month or two, when demand is much lower than the supply, even though we have cuts by OPEC to some extent, and we have declines in U.S. and Canadian production because of the issues of storage and the lack of capital, there's still going to be a glut of 5 to 15 million barrels. The number is such a big one because people just don't know how much is left in storage and then how much, the production numbers are going to be. But that's going to be, once the storage is full onshore and on the shipping, that's when we're going to probably see the price get stable, because there's no way to move product after that. You don't have ships, you don't have places to store it. So there's two arguments that come out of it. One, the marginal barrel after that will trade for very low prices, just like WCS was doing recently, and some people say WCS could go negative. The offset to that is if you can't move it, you can't sell it. So we may see prices stabilize once we get to maximum capacity in terms of storage and maximum utilization of all the transportation system, both onshore and offshore. And to me, that's part of the bullish scenario for Q3.
What's happening in the gasoline and diesel markets?
Well, that's where the refining and marketing companies, the Imperial Oils, the Suncors, the Huskies, will do better because, Shell that have, and Parkland, which have refining and marketing operations at the gas station. But we're all not driving as much as we did before. So even if they have a few more cents on the gallon, we're not filling up our cars. I don't think I filled up my car in the last 2 weeks, and normally I would do that once a week when I would go to meetings on a regular basis downtown. Now most of my meetings are going to be conference calls and webcasting of quarterly meetings and conference calls on them, and then annual meetings are all going to be videos. They're not going to have face-to-face personal people coming to the AGM. So I think that the R&M side will probably do better once the recovery starts to have some legs. And while they may not be making as much on the upstream, they'll be making, the R&M companies will make more money on the downstream. And so the companies there are Imperial Oil, Suncor, and Husky and Parkland would be the bigger players.
Have you been buying oil and gas stocks in the market downturn?
Yeah, during the March lows when we had the decline there, and there's an index we watch which is called the S&P Bullish Percentage Index, and it was in the 80% level in January, February, and we have noted over history that when it gets down below 10%, it gives you a buy signal, and over 80%, it's almost like a sell signal. And we got it down when we said if it could get down below 5%, like it did in February of 2016 or March of 2009, it would be a buy signal. We took advantage of that and sent out a action alert to our subscribers saying that this was a great buy signal. We also added 8 new names to our buy list, so we took advantage of it, and I myself and our family took advantage of this and bought quite a few names during that downturn. Since then, which was like mid-March, I haven't been buying anything as the rally. We've had some great performance on some of the stocks, but I'm waiting for the next big buying opportunity, which, as I said, could happen late April through May, the end of May, and that's when I would be adding to positions. So, the dividends that I'm getting, I'm holding for cash. The cash I have, I'm holding, and I'm waiting to commit the next tranche of capital when we get this next buy signal. And that's part of what we're watching and covering in our reports.
What's been worse for the oil and gas industry in Alberta, the coronavirus or the Trudeau government?
I'm from Alberta. You can guess the answer, but I think both are bad. The virus, of course, takes away the energy demand. It's caused a glut. It's probably the more significant of the two. But the lack of support for the industry has really hurt the industry over the last couple of years. So, since 2016, 2015, 2016, the industry has been in trouble over egress issues, and over, all the government's, issues of, the taxes on emissions, and not supporting the industry on egress. And everything from, the LNG side to the pipeline for oil side. So, one has been a long-term painful one the Trudeau government and the one for the last 2 months, which has been it's like a 1-2 punch. This one is a more severe punch because it really just knocked the demand out and destroyed the price. When you're $60 at the beginning of the year, $65 in January at the high, and now we're looking at something below $20 for the spot price. It's below the cost of production, even when you take into account the Canadian dollar equivalent, and take into account all the costs, pipelines, royalties, G&A, interest costs. So the industry is not making money except for those companies that have put on very good hedge books and have themselves hedged. A lot of decent companies have hedges for the first half of the year of decent amounts, but then those taper off in Q3 and Q4. So many companies that report their results in the next few weeks that have good hedge books will show reasonable results, but their guidance for going into Q3, Q4 will be more negative because that's when because you can't hedge at high prices now. And so when those hedge books run off, that's when the pain starts to be felt by those companies. And that's why we're seeing a lot of companies, plan on cutting their dividends and also cutting salaries and cutting costs wherever they can so that they can find a way to survive during those difficult months once the hedge books run out.
How can people find out more about the Schachter Energy Report?
Well, they can go to our website, www.schachterenergyreport.ca, and on the cover page they can see some of the complementary research that we have that's older. And also, if they want to keep up with what's going on, given the craziness going on in the oil and gas industry, as I mentioned earlier, you go to the bottom of the page, and I think there's a click on for the free complimentary Eye on Energy, and that's a weekly publication that we just started up and put on our website a week ago. So it's something we'll be doing on a regular basis going forward. And then from there, if they like what they see, they can then become a quarterly or an annual subscriber to the basic, the black gold product, which is the main product that we produce.
Joseph, with everyone sequestered, are you still bringing out the bow ties?
When I did the last BNN, I didn't wear a bow tie, and I probably won't when I'm on in May. And people wonder why I'm not, but I may or may not do it depending upon you see most people on the interviews now, when they do either a Zoom or a Skype call, it's not very many people wearing a regular tie, so I think I'll probably hold off until this quarantining process is over, and then I can bring out those great bow ties that I have and also show up live on presentations on BNN or wherever I do the face-to-face presentations. I like doing it in person, but I think it's part of the quarantine. I'm not sure I'm going to wear a mask when I do BNN, live with them on. I think the next BNN is on Wednesday, May 20th. I'll probably be just sitting at my desk without a mask on, but probably no tie either.
Joseph, thank you so much for chatting with us.
My pleasure. It's always a pleasure, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report, online at schachterenergyreport.ca. He was speaking to us from my hometown of Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.